Hi there, welcome to my YouTube channel. My name is Arnab Ray. I'm an entrepreneur and crazy about startups. Over the years, I've set up 7 successful ventures, and now I'm looking forward to share my experiences with you all through this YouTube channel. Hope my experiences will help fellow entrepreneurs as well. It is also very important that you understand the investor's psychology. First is the investability of your business. Entrepreneurs are passionate as they want to change the world, solve a problem, but don't expect investors to be as passionate as you are about your business. The investor would invest in your startup primarily to make money. So it is important that your business offer a lucrative investment opportunity. Investors usually carry a portfolio of startups. So it is natural for them to fund companies which are complementary to the startups already in their portfolio. This is because the startups can complement each other's business. For example, if I have an e-commerce venture in my portfolio, investing in a logistics startup or a payment gateway startup would make a lot of sense as they can be integrated in the future. Moreover, there is always a possibility of a future merger or consolidation. So do your research into the investor's portfolio before pitching. Investors tend to invest in a hot trend. You will see whenever an innovative business pops up, a lot of similar business comes up in a very short period of time. This is based on a phenomenon called economic pendulum. So why do investors invest in similar business? Well, if a major investor invests in a type of business, the other investors looks for their competition to fund, primarily because the market is nascent. So whoever executes it properly would gain the market share. Moreover, similar businesses of scale with varied market reach are easy target for acquisition, which ensures an exit for the investor. For example, Uber, Ola and Taxi for Sure. Taxi for Sure was acquired by Ola. Then you have Zomato, Swiggy, Foodpanda, Uber Eats. Again, Uber Eats was taken over by Zomato. If you know any such examples, mention them in the comments below. I would love to know about them. Investors look for a balance, a sweet spot on the competition scale. They avoid businesses that aim to create a completely new category, because then the business would have to create awareness for the category, educate people, and then create awareness of the product, which in turn makes the job very difficult. They also avoid highly saturated market full of competition. The sweet spot lies in between. They look for an untapped market within an existing business category. One of the things investors hate to hear is the market share syndrome. Often entrepreneurs pitch from the viewpoint of market shares. They would ideally say the market is so and so billion, so if we manage to get 1% market share, we will have a company worth X million. But in reality, things don't quite work that way. So you should always avoid going the market share route in your pitch. The research you do for the market and its growth is solely to substantiate the business case. Once you understand the psyche of an investor, you can optimize your pitch accordingly. Here are some of the things that investors won't tell you. Point number 1. You must understand that funding is a business transaction between investors and a startup founder. Just like a startup would need funds from the investors are also quite eager to invest in lucrative startups. It is a symbiotic relationship. It has to be right fit. So you must ensure that you do your due diligence on the investors, their sources of funds, their management style, and their support system they offer before signing the deal. Point number 2. Do not raise funding more than what you need. Capital is expensive. Raising higher capital at an early stage means more equity needs to be diluted out to investors. And also, additional funds often result in unwise spending. Point number 3. Never raise money with an increased valuation. It might be tempting to do so, but in subsequent rounds of funding, inflated valuation will be normalized, resulting in a down round. This makes the existing investors extremely unhappy and would tarnish the market reputation of the company. You must have seen that valuations of several unicorns were suddenly slashed down. If you remember, Flipkart was valued at $15 billion in June 2015, but Morgan Stanley slashed its valuation to almost 1/3 to $5.37 billion in 2017. Point number 4. When you raise funds, you're literally married to the investor. In subsequent rounds, if your existing investors do not reinvest, it gives out an indication that something is wrong. Other investors might think that the existing investors might know something which they don't. So they are very cautious of investing in such a scenario. Point number 5. It is not just about the money. You must understand that you as a founder must gel with the investor. Your vision and goals must be aligned. A lot of funded startups fail due to expectation mismatch between the founders and the investors. Which brings me to the next point. You must understand the responsibilities that come up with funding. Managing investor relations, compliance, and reporting. All of this requires additional time and effort. So it is extremely important that you manage investors' expectation, maintain transparent communication with your investors at any point of time. If you need any help with your business planning and the funding exercise, feel free to contact the team at B-Plan Experts. And by the way, did you check out Crazy About Startups? It's made just for you. Get recent updates from the startup world, learn from experts, network with fellow entrepreneurs, investors, and mentors. And it's all for free. Register at crazyaboutStartups.com and download the Android app today. You can also connect with me on Crazy About Startups. Hope you liked the video, and if you did, please press the like button. If you have any queries, put them in the comment section below and I would love to answer them. Please share this video with all your friends and follow my blog at arnab.co. And don't forget to subscribe to my channel, as I would be coming up with fresh new videos every week. Wish you all the best until we meet again.